As of 10:46 a.m. Eastern Time, Datavault AI Inc., which trades under the ticker DVLT, is at $1.56 per share. That's a drop of 4.16% for the day, a loss of about 7 cents. Now, on the surface, a 4.16% drop on a sub-$2 stock is just noise. It's the kind of volatility you'd expect from a speculative tech company. But this isn't just noise. This is the market trying to solve an impossible puzzle, and the $1.56 price is a symptom of a profound, high-stakes identity crisis. The immediate surface-level expectation for Datavault IA is that it's a ground-floor opportunity. The name itself is a masterpiece of marketing. Datavault and AI. It's a name custom-built to attract investors on the Robinhood app or those doing self-investing on SoFi Invest. The story is even better. This company is a tidal wave of breathless press releases. Just in the last few weeks, they've announced a 467% year-over-year revenue growth. They've announced a $150 million strategic investment agreement. They've updated their revenue guidance, projecting $30 million for 2025 and a massive $200 million for 2026. They are talking about negotiating with governments and corporations to tokenize trillions in real-world assets. There's an analyst from Maxim Group with a buy rating. This is the expectation. A $1.56 stock that, based on the headlines, looks like it's about to become the next NVIDIA stock. But that is the expectation. The reality, as reflected by this $1.56 stock price, is that Datavault AI is one of the most speculative, high-risk, and frankly bizarre stories on the entire Nasdaq. The reality is that this company's financials are a disaster, and its business model is a confusing word salad. What we're seeing with today's drop is the market's inability to reconcile the avalanche of PR hype with the terrifying numbers on the balance sheet. Let's start with the most glaring reality check. Just a few months ago, in May of this year, Datavault IA received a delisting notice from the Nasdaq. The stock was trading so low for so long that it violated the $1 minimum bid price. They were given until November 3rd, just 10 days ago, to regain compliance. The stock did, in fact, have a massive volatile run-up from under $1 to over $3, saving it from delisting for now. But this isn't the chart of a healthy company. It's the chart of a company that just pulled itself back from the abyss, and today's 4.16% drop is a reminder that the abyss is still staring back. The disconnect deepens when you look at the financials. That 467% revenue growth they announced, it sounds amazing. But let's look at the real numbers from their fiscal second quarter report. The total revenue was $1.74 million. That's it. And to generate that $1.74 million in sales, the company posted a net loss of $37.12 million. Their net profit margin is negative 2,140%. This is not a growth story. This is a catastrophic cash burn story. But the single most important number, the one that defines the reality of this stock, is this. In the past year, shareholders have been substantially diluted, with the total number of outstanding shares growing by 3,501%. They are funding their $37 million loss by printing and selling stock at a machine gun pace, eviscerating the value of every single share held by investors in their individual brokerage accounts, whether at Fidelity Investments or Interactive Brokers. This is a dilution engine masquerading as a high-tech AI company. This is why the institutional ownership is a paltry 2.1%, while the general public, the retail crowd, holds nearly 79%. The smart money at Fidelity Mutual Funds or Schwab Intelligent Portfolios won't touch this. So, what does Datavault IA actually do? This is where the story gets even more confusing. The expectation is AI. The reality is a kitchen sink business model. They have an acoustic science division with tech called WISA and ADIO. They have a data science division focused on Web 3.0. They are trying to tokenize real-world assets like precious metals and carbon credits. They have a Verify You platform for credentialing. They just acquired a company called Sync In Audio QR for audio-triggered data capture. It's a jumble of every buzzword from the last 3 years: AI, blockchain, Web 3.0, and audio. And then there's the memecoin. Just a few days ago, the company announced it approved a Dream Bold Draft memecoin distribution, 1 per share. This is not a joke. An AI company, supposedly negotiating with governments, is distributing a meme coin. This is the kind of gimmick that sends serious investors using the Fidelity trading platform running for the hills. But it's perfectly designed to capture the Robinhood stock trading crowd. This entire narrative is now playing out in a high-stakes legal battle. On October 31st, the short-selling firm Wolfpack Research released a scathing report, calling the company out. In response, just a few days ago, the company announced it is suing Wolfpack Research for defamation. So now you don't just have a battle between bulls and bears, you have a literal legal war. The market is trapped, trying to decide who is telling the truth. Is this a $200 million revenue-in-the-making AI powerhouse, or is it, as the short sellers allege, a house of cards? This is the tension driving the price. Insiders, by the way, have only been selling shares for the past 3 months. The future outlook here is binary. The entire bull case, the only thing keeping this stock at $1.56 from collapsing back to 30 cents, is the $150 million strategic investment from Scilex Holdings. That cash is the company's only lifeline. If that deal, which is still pending shareholder approval, goes through, it buys them time. It funds their cash-burning operations and gives them a window to try and turn those tokenization press releases into actual non-dilutive revenue. If that deal fails, the $37 million quarterly loss versus $7 million in revenue is a mathematical death sentence. The 35.01% dilution will look like a warm-up. This is not an investment like buying Apple stock or Tesla stock. This is a high-stakes gamble. It's a bet that the Scilex funds will arrive and that the meme coin distributing, short seller suing, buzzword salad company is, against all odds, the real deal. I have to ask you all to comment below. Is this Dream Bold Draft meme coin a brilliant marketing move for the modern age, or the biggest red flag you've ever seen in a Nasdaq-listed company? In the end, the story of Datavault IA is the most extreme example of expectation versus reality I have ever seen. The expectation is a torrent of world-changing, AI-powered press releases. The reality is a $1.56 stock with a 35.01% dilution rate, a $37 million quarterly loss, and a business model that includes distributing a meme coin. The market is right to be confused, and today's 4.16% drop is just a quiet expression of the profound, deafening skepticism that surrounds this company. This isn't a buy-the-dip candidate. It's a lottery ticket, and the drawing is happening in real time. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.